The past 2 days, we had been very perplexed by the movement in oil. We had seen all the fundamental indicators that oil should continue to rise, the fact that the Saudi minister said OPEC was going to stay together, and that they had no deal, which meant no production increases. Yet, some weird pattern happened back-to-back days. We didn't really have a total explanation for besides paper trading hedge funds being afraid of the Delta variant and uncertainty that they couldn't stomach with regards to uncertainty around OPEC. And that trend was that the price of oil was up in the morning and then came down as the market opened and stayed down the rest of the day. Today, we saw the complete opposite of that. We saw oil down in the morning and rally throughout the day, breaking the channel and the very steep channel. And I'm not a technicals guy, but we're going to get into some technicals in this video because it's a lot of technicals to talk about. And a lot of trends we have been talking about that are being possibly happening and beginning very strongly on this day. And one of which is a reversal in oil. It's possible, and we're not going to know without hindsight. So maybe my face, as I said yesterday, gets ripped off. But we're living another day. My face is not getting ripped off right now. It's possible that oil made a double bottom. That is a technical term. And that will mean that's the opposite of a double top, which indicates that a massive fall is going to happen. A double bottom indicates a rally is going to happen. So we have no production increases. I'm seeing prices of gas at $4 a gallon. Granted, I'm on the end of Long Island. Yes, it's slightly more expensive here, but that is higher than it has been recently. So gas isn't getting cheaper. It's getting more expensive. I think this cheap oil, this decline that has happened the past 2 days is that paper trading and weak hands. And what we have to focus on are the fundamental supply and demand dynamics and the inflation picture, all of which I believe are bullish for oil. Now, the next thing that we've been perplexed by is this notion of bond yields rising, or bond yields falling rather. And this is something we didn't want to fight. We said Amazon, Apple, they're very expensive. Apple, they're great companies. We're not trying to take away from the fact that they are great companies producing great products, but they are very expensive. That's why we don't own them. And they've had their run, but we couldn't go short them. We couldn't fight them. Why? Because bond yields kept falling. Today, we saw an incredibly aggressive buying of bonds and falling of yields. And I saw some intraday fund strat letter, okay? They don't normally post intraday letters. They do when there's a lot of volatility in the market. And they want to give the people that are paying them some of their thoughts right there when we need it most, right? And in addition, they don't normally post things on Thursdays. So this is a very important report, and it was titled a very important report. It said a reversal of the 10-year yield. They brought up a technicals chart, and they showed us that the 10-year yield is kissing the 200-day moving average. Long story short, that means bullish. It would be one thing if it broke right through it, then that's a bearish signal. That means there's something fundamental that has caused us to value this product differently than we have on average the last 200 days. However, that did not happen. It looks like, and another thing that's too easy to tell, we will only know with hindsight, another thing, it looks like it's kissing that and bouncing off. We're not technicals guys over here, but we like to see that. We like to have these thoughts in our mind. Wow, like if you had me on Snapchat, I was ranting about how I got interest rate I literally just picked it up today. A used 2011 Range Rover with 100,000 miles for less than pi. So that is ridiculous, and this is not sustainable. Things are going to turn around. So to have that feeling, to have those notions, and to see it in technicals, I'm feeling a relatively high level of conviction that bond yields may have bottomed today. I'm agreeing with Tom Lee's fund strat wholeheartedly on this. It's something we have been saying on this channel, but we didn't know when it was going to happen. We didn't want to make a call. he's making a call that it's today. And we're cool with that call today. We had that rant yesterday about the car. We saw the technicals today. We're going with it today. Another thing that he says is correlated with this bond yield move is epicenter stocks. How fantastic. Energy. So we like to see that correlation. I believe it was the NASDAQ over epicenter in line with the 10-year charts. They are not 100% correlated, but very much so correlated. So let's assume the 10-year goes up because there's inflation way higher than 1.25%. Yet, bond yields were at 1.25%. I don't think anyone wants to buy that. I think there's only so much foreign demand. We're seeing Russia get concerned. Why won't other countries get concerned? Maybe they're doing a lot of stimulus like everyone is, So whatever. But we have been very bullish the inflation trade. And the inflation trade involves being short treasuries. Technically, we're still bullish the inflation trade. We are still bullish the inflation trade. And we'll see what happens next week when the Fed releases inflation numbers. Maybe they're in the other direction. Maybe there's deflation. It's possible. And in that case, we'll be one step closer to getting our faces ripped off. But we're seeing a lot of things happen on a very volatile and scary day in a very strange week. And we're sticking to the script, having the iron stomach and the balls of steel. And we are sticking to the script with the plan, with what we believe is the truth. Regardless of what's happening short term in the panic, we stick to the fundamentals over here. And with that, we will see what happens next time. So until next time, peace out.